Hey everyone, welcome back to Upside Down Data. Today I want to talk a little bit about this jump in transactions per second we've been seeing on Hedera and what it might mean for the future of the network. So if you've been on Twitter or on Reddit, you might have seen this image go around, this image depicting Hedera Hashgraph having the highest TPS of these major chains that are up here for comparison. Hedera here being shown at 580 TPS, above Solana, above Stellar, above Algorand and some of these other big competitors. Now this caused a bit of a splash. Obviously, Hedera fans were very happy to see this, and you can see it for yourself if you go on to HederaTransactions.com. This is just a very simple site that all it really is showing you is the number of transactions that the mainnet has done and shows you the current TPS. So currently the TPS is a bit low. This kind of fluctuates around as I was watching this for a little bit. It fluctuates between here to up back to 570, up to above 600, sometimes 700. It kind of fluctuates around, but it seems to be around the ballpark of what was shown here on this image. And then likewise, you can confirm some of these other numbers too. So just give some examples. If we look at Algorand, current TPS at a little under 9, 8.56. Look at Solana. True TPS here is up at 536. It was down at around 300 something when I looked at this just a minute ago. But generally speaking, seems to be in the ballpark of what this figure was determining. So let's go ahead and talk about it a bit more. So the first thing I want to do is some math. So first thing I want to do is look at the average TPS over a longer period of time. As I was mentioning, when you're just watching the TPS on this site, for example, it bounces around a lot. See, it's already back up here to 751. Let's look at it over a longer time scale to see what the maybe more true TPS is on average across time. So what I'm going to do is take the number of transactions across a day and then just divide it by the number of seconds in a day to see how many transactions seem to be happening over a longer period. So these data are coming off of Dragonglass, which is another block explorer for Hedera. And then also what we're going to do next is then calculate in dollar terms what this volume might mean for the network. How much money basically is being spent on these transaction fees. So let's go ahead and bring this up. So I just threw together a quick little slide here just to walk through some of the math. So when I pulled off the transactions in the last 24 hours, this was the number that I got. So obviously this is going to bounce around as well, but this is the number that Dragonglass was showing me when I pulled the number off. It was just under 50 million transactions in the last 24 hours. Quite impressive, right? And quite a bit higher than Hedera had been doing recently. We'll talk a little bit more about probably why this number has jumped so high. But let's get to that in a minute. So this is the number of transactions last 24 hours. So now we can confirm that number we were seeing on that post. Just divide that number of transactions by the number of seconds in a day. We get to roughly the same number. So they had 580, we get 574 here. Roughly the same, roughly equivalent to what they were seeing. So that's quite good. And this is quite a bit higher than Hedera had been seeing in the past. Now let's do kind of the fun bit and look at the amount of money that is being spent on these transactions. So assuming this TPS continues over time, so in a month then, basically what I want to look at is how much money would be spent basically on HBAR to pay these transaction fees over that time. So we can get the number of transactions that are expected in a month by just multiplying the number per day by 30 days. We assume a month is 30 days. Then we get to about 1.4, almost 1.5 billion transactions in a single month, which is quite impressive. So now we need to see how much this costs. So it turns out that the vast majority of these transactions are using the Hedera consensus service. I'll show you in a minute. You can just look in Dragonglass. It gives you a breakdown. It's like 99% of the transactions are the consensus service. So I'm just going to assume that they're using just the cheapest, kind of more generic message in that service, which the fee for is 0.0001 cent per transaction. And so if we multiply this number of transactions expected in a month based on this TPS by this fee value, we get to a little under $150,000 a month that is expected to be spent on transaction fees on Hedera Hashgraph. Now, 150,000 is not a lot in the grander context, right? I think Hedera currently has a market cap, or HBAR currently has a market cap of over $1 billion. I'll pull up CoinGecko in a minute, but it's 1.4, 1.2, somewhere in that ballpark. I can't remember. We'll see in a minute. So you might look at this and say, okay, does monthly revenue of $150,000 really justify that large of a market cap? Well, maybe not, but you have to remember that this is maybe just the tip of the iceberg in terms of what Hedera could do. Hedera has a limit currently of about 10,000 transactions per second of this type on the mainnet. We're not even getting anywhere close. We could get 19, 18 times more transactions per second going on here before we get close to that limit. And so this is really just touching the iceberg. And also I should mention, so here's the graph showing that most of these are coming from the consensus service. Here's actually showing rounding up to 100% because it's so dominant by that. But the thing that's important to note here is that really what it seems like is that all of this massive, not all, but most of this massive jump in TPS is coming from one use case. And that's this Atma.io, which just launched on the mainnet. We can actually see this if we look at the transaction counts. You can see how the transaction counts back here are, on a daily level, still decent in the hundreds of thousands of transactions per day. But then we jump all the way up to what we're seeing now, 50 million transactions in a day. And what this is being ascribed to is the launch of this service. I believe it's been confirmed that this has launched on mainnet, and so that's probably what's driving this. And I'm not an expert on this, but my understanding of what this use case is basically it's a way of tracking supply chain. So basically the idea is that there are individual items that are labeled with RFID tags that get scanned, and it's basically a way of documenting the movement of products throughout the supply chain to make sure that a product that enters the supply chain is the same one that exits it, that you're not getting fraud, you're not getting high quality parts swapped out for lower quality parts and then having people pretend that it's the original part. It's a way of basically trying to track the movement of all these things and also add transparency so that people can go back and look and see where things came from. And it also helps for things like ethically sourcing products, all that kind of stuff as well. And I believe down the road they have plans to expand this to help with things like carbon credits and tracking some of those things as well. But basically it's a massive potential use case that's being kind of pushed forward by Avery Dennison. And it's one of the big kind of commercial use cases that's been deployed on Hedera Hashgraph. And this is, of course, been something that people have been waiting a very, very long time for, because when you're just watching Hedera do 500,000 transactions in a day, when you know what it's capable of, it feels nice to suddenly see it being able to stretch its muscles a little bit, even though this is just a fraction of what it's actually capable of. So HBAR has been reacting very positively in price recently. Now it's a little bit hard to know if this is because of this use case launching or if it's just because of the broader markets bouncing. We really have no idea. It's hard to really parse those things together. But HBAR has been on a bit of a tear, up a max of 50%, in this run up from the lows. So not as high as some other, projects, but certainly quite impressive. But I think what's more to the point here and what's more interesting here is that Hedera is starting to do the thing. It's starting to realize some of that potential that we all, anyone who had been following the project knew it had, but the question always was it ever going to realize it? Were any of these use cases ever going to actually be launched? Was this ever going to happen? I believe it's been confirmed, although I'm not going to make this too definitively a statement. I believe it's been confirmed that this is not just a test and that we can expect this to continue. That, I think we'll have to wait a little bit more just to make sure of that, but I believe that's been confirmed. And if that is the case, that will be really positive for HBAR, because again, when we look at this table here, on a TPS perspective, Hedera is blowing other things out of the water, and that's with just one use case deployed on it. You can imagine how it could get higher with other, commercial use cases getting deployed, which have been talked about. And this has caused some consternation out here. Now, I'm not going to be out here declaring a winner or saying one chain is better than the other, but I have seen a lot of consternation, for example, on the Algorand subreddit and some others, kind of disbelieving that this is possible. But this is what Hedera has been built for. This is what really the developers were envisioning with it. It was that it was going to be something that's used by enterprises. We're starting to see that happen now. So really for the long-term prospects of HBAR, though, just based on the math that we just saw, that if this really is the number of transactions we can expect per second and per day and per month, the fees alone are quite reasonable just from one use case. 150,000, in a month. That's a pretty decent amount. Now, obviously, as I mentioned, it may or may not be enough to kind of justify the overall kind of valuation that's been put on it. So let's go ahead and just move over to CoinGecko here. I'll just pull this up real quick, as I mentioned before. Go over to CoinGecko. Let's just take a look at where Hedera Hashgraph is. So I believe it's around 30. Here it is, 39. So its current, let's see, let's find it here. Current market cap, 1.3 billion. And so you could ask the question, is $150,000 of fee value really make it worth this much overall? Probably not from just a pure technical kind of valuation perspective, but you have to remember that that's just one thing. And also what these transaction fees do is they set the floor for kind of money coming into HBAR. That kind of guaranteed, if this continues, that $150,000 every month is going to flow into HBAR because they have to buy that much to be able to pay for the transaction fees. And then if we can expand that by multiples, and especially as mainnet scales and as it can handle even larger numbers of transactions per second, you can imagine that ballooning more quickly. And so if more use cases get adopted that require large volumes of transactions, the transaction fees alone could become relatively profitable. And that's to say nothing of when they, make staking be, running nodes open to the public instead of being permissioned, where some people would want to jump in and start running nodes for Hedera to start getting a piece of that transaction pie, which would require them to buy a bunch of HBAR to be able to run that validator, et cetera, et cetera, et cetera. So you can imagine how things could snowball to some degree. Now, I don't want to get ahead of ourselves, right? The fact that one use case has been launched is a great first step, and it certainly signals that more could be on the horizon that could be really quite bullish. But I don't want to think we should get ahead of ourselves here and just think this means that we're guaranteed to just go jetting off to all-time highs and go parabolic and up to $10 or anything like that. Because I just don't think that that's reasonable right now from this perspective. I think HBAR is still a crypto asset. It's still going to be tethered to broader market conditions, and one use case showing that it's working, that it's using the network as expected, is not enough to make us believe that it's a slam dunk and everything's just going to be sunshine and roses from here. But it's a critical first step, and this is one of those things where in the past I talked about this, where kind of keeping an eye on the thesis and whether or not it's reasonable. And I had been concerned with HBAR with how for so long it had just been kind of built up on hype and promise and not really shown anything too meaningful yet. But this is kind of a big step in the right direction, where it's now showing some of that adoption by these enterprises. And if that continues, that would be a very bullish continued development. So I think we have to keep an eye on that. We have to keep watching that. But this is a great first step, in my opinion. And it really is something that right now sets Hedera apart from a lot of those other competing chains, because again, it is handling an awful lot of transactions. And there's a lot about Hedera that makes it appealing to things like enterprises. It's very cheap and it has stable transaction fees that are pegged to the dollar value, not to the price of HBAR. So there's a lot of things that has going for it. So obviously none of this should be construed as financial advice. I still think we have a ways to go to really see that fundamental picture get realized by Hedera. But this, in my opinion, is a massive step in the right direction, and one I think is important to be aware of. All right, if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. A lot of updates about indicators and more over there.